Hi, my name is Yasha and I help young men invest in the stock market. So today we are going to analyze this company called Cleveland Cliffs Incorporated with the stock ticker CLF. So this video is for you if you are wondering whether you should buy or sell this company or if you just want to know how to analyze stocks as a complete beginner, okay? Now, as always, we are going to analyze it using this little Canva presentation that I have right now here. So let's begin, okay? First of all, why should you even listen to me? As you know, my name is Yasha and I help young men invest in the stock market. So when you have more trust for me, feel free to click the first link in the description. Now, let's begin with the actual analysis. This is going to be very beginner friendly, simple, quick, straightforward. Grab a piece of paper, grab a pen, make some notes because you will learn a lot, okay? Now, generally, as a complete beginner, you should care about the following things whenever you analyze stocks. You should care about chart, profit, debt, money on the bank account, value, and price. Now, here we have some quick facts about Cleveland Cliffs. It's a metal and mining company. It was founded in 1847, so it's quite old. And that's about it. That's what's interesting about it. And here already I want to show you one thing that you should pay attention to, okay? Whenever you analyze stocks, you should take a look when the company was established, okay? In our case, Cleveland Cliffs was established in 1847, which is an outstanding age. And what I mean by that is that this company is already operating since like 180 years, which is absolutely amazing, okay? Because whenever you invest or whenever you analyze stocks, you should always take a look at the companies that are as old as possible, okay? Because those companies are generally they come with higher chance that they will survive maybe one additional potential future crash, you know what I mean? So if this company, for example, has been around for already 100 or more than 150 years, then this is for sure much safer investment than some startup that was established 1 year ago, because for that startup we didn't know how the management would react when they come to a crisis, because so far they haven't experienced any crisis whatsoever. But Cleveland and Cliffs, for example, has been on the market for over 150 years, which means that they survived at least 5 stock market crashes at least, okay? Which gives us a bit more, which gives us more trust to the company and that the management can deal with situations like that better. You know what I mean? I'm repeating myself way too much, but this is important, okay? So as a rule of thumb, the older the company, the better. And now we come to the chart, and for chart we have an instruction that chart has to grow for all 10 years. Now what exactly does that mean? That means that I will draw a little exponentially growing line, kinda like that. And then we are going to compare the actual stock price chart, which is the orange line right now here, with that black line, okay? And preferably they should follow each other, because when that happens, that means that the company is growing, it's expanding, it's profitable, and this is what we want to see. We want to see a consistent growth, okay? Now, is that the case here? Kinda it is, you know. First of all, you can see that the chart fell a bit back in 2015, but then it was kinda growing and following that line until around 2023, when the price stayed kinda the same, okay? Now, in my opinion, this is still kinda okay, you know, like the chart is growing, it has that momentum. Right now, unfortunately not, but what can we do? You know, maybe right now it's the opportunity to buy the stock. We don't know that yet, okay? So we will still mark chart as a good thing because it's growing slowly, it's progressing. This is what we want to see, okay? And now we come to the profit, and for profit we have an instruction that it has to be in plus and it has to grow as well. Now here is the very same story as with the stock price chart. I will draw a little exponential line, kinda like that. And now we are going to compare whether the profit chart follows that line or not, okay? And right now here you immediately see a couple of red flags. You can see 2014, 15, and 2020. Now what do we have here? Here we have loss, L-O-S-S. We have a loss instead of a profit. And this is the very thing that we don't want to see. Whenever you have a loss in a profit chart, that's immediately a no-go. Like here is immediately end of the story. And here is when my interest for Cleveland Cliffs is finished. Right now, from this point on, I don't care about this company anymore, because whenever we invest in stocks, we want to invest in profitable businesses, because we are literally giving our money to one business. Like we become owners of that business, co-owners. But you know what I mean? And if that business makes a loss, then that's a bad investment for us, because that means that in 2014, 2015, and 2020, we didn't get any profit. You know what I mean? We lost the money. And this is what we hate to see. We hate to see losing money, especially when we are young men with limited budgets. So whenever you have a loss in profit chart, that's immediately a no-go. Like forget about the stock. Obviously, right now, I'm interested how other topics from this stock are, but in my head, it's already like, no. You know what I mean? So let's proceed then. Now, for debt, we also have an instruction that it has to be low, and preferably, it should also decrease through the years. Now, here the debt was actually decreasing quite well. You know, from 2014 to 19, the debt was decreasing, but then it increased massively, but it's still decreasing. So that's actually quite a good thing. I don't know if, yeah, this is one of the rare stocks that we found where they are like actually decreasing the debt, you know what I mean? So that's a good thing actually, I like it. Now we come to the money, and with the money we literally measure the money that they have on their bank account. Just like you, for example, on your bank account you have right now $400, $500. Here is the very same money that we take a look at, okay? And preferably that money should be higher than the costs. Now, how do we know that? We take a look at the bank account balance, okay? How much money they have on the bank account is called bank account balance. If that is positive, then they have more money than the costs, okay? Now take a look here, use your brain, you are a smart young man, as I always say, okay? How much money do they have? Almost $2 billion on their bank account. So that's an amazing sign to see. If they have more money than the costs, which is the case right now here, that's amazing, because whenever something unexpected will happen in the future, they will have the money to cover it, you know? Just like you, for example, you are much more relaxed, you are much more happy, you feel like a boss when you have the money on the bank account, just like everyone else, right? And the same is with the companies. If they have money on the bank account, that's a good thing for them. That means that the management will not do anything stupid in a stressful environment, in a moment of panic, you know, because they have money to cover some costs. It's that simple, okay? So money is good to go. We are happy. $2 billion is more than enough, okay? And now we come to the value, and obviously we want to invest in stocks that are undervalued, just like right now here on the screen, okay? Now, how do we measure valuation? By two things. First concept is called P/E ratio, and the second one is called intrinsic value. The second one. Okay, now as a complete beginner, those two expressions might sound a bit complicated for you, so let me quickly explain it. P/E ratio is one ratio used to measure how undervalued is this company, so Cleveland Cliffs, in comparison to the whole stock market and competitors as well. So, in order for Cleveland Cliffs to be undervalued in terms of the P/E ratio, it has to be lower than 15, because 15 is the average P/E ratio of the whole stock market. And obviously we want to invest in stocks that are below the stock market. That means that they are undervalued with higher potential to grow. Now, how is the P/E of Cleveland Cliffs? It's around 20, which is slightly higher than 15. So in terms of the P/E, Cleveland Cliffs is overvalued. Now let's come to the intrinsic value, and this concept is actually, it will sound difficult, but it's very simple. So intrinsic value, it actually tells you what price should the stock have right now, the price that they should have, okay? But the actual price is right now here on the screen, okay? So let's take a look at the example. That company called Cleveland Cliffs should have $20 per share, the stock price, okay? But they actually have $15. I'm sorry for this little mistake here. So they actually have a price of $15, which means that the stock is actually by $5 undervalued, because the price that they should have is 20 and the current price is 15. So 5 euros below what it should have been. You know what I mean? It's that simple. And you can also see in the instruction, intrinsic value is always higher than the stock price for undervalued stock, okay? Now that is the case here. Now, is the stock under or overvalued? Whenever we analyze stocks, we want to be as harsh as possible when we analyze them, okay? So when you have one good thing and one bad thing, treat that as a bad thing overall, because even if you are wrong, then you still have a bit of a security because you were wrong and the good company, the company is good anyway. But if you were right, then you didn't buy that company anyway, you know what I mean? Even if, I don't know how to explain it, but the harsher you are, the more emotionless your evaluation is going to be. It's that simple, okay? So we will mark this stock as overvalued stock, okay? And now we come to the price. And for price, we have an instruction that it has to be lower than 150 euros. Since you are from America, for you, $150. Now the current stock price at the moment of making this video, it was $15, which is 10 times lower than our limit. So that's a good thing to go. The price, the stock is underpriced. Now 150 is a limit that I set for myself, and I recommend that you follow it as well, because whenever you are a young man, you have a tight budget, okay? You have maybe $400, $500 that your grandma gave you, and you want to invest that on the stock market, okay? Now, if you buy one stock that costs, I don't know, $400 or even $500, you will have only one single stock. But if you buy cheap stocks that are, let's say, maximum $150 or even $100, then you will buy at least 5 different stocks, which already diversifies your portfolio a bit, which already means that you have like higher chances of succeed, because if let's say that you buy one stock for $100 or $500, sorry, if you buy one stock for $500 and it crashes, you lost the whole money. But if you buy one stock for $100 and it crashes, you lost only $100. You know what I mean? So that's the idea here. The cheaper we buy, the better it is for us, because we want to make money, not spend it, okay? Now let's proceed. We will go now to the final evaluation, where we are just going to summarize everything that we found out about this company, okay? Now, does the chart grow? Yes, it was growing, but right now for the last 1 or 2 years it isn't, but we still like the chart, so we marked it as a good thing, okay? If you don't believe me, go watch the whole video again. Okay, now let's come to the profit. Does the profit grow? Absolutely fucking not, because they had a loss in 2014, 15 and 20. And I told you, whenever our company has a loss in the last 10 years, just forget about it. Forget about unprofitable businesses, because it's bad. If they cannot make money 3 times out of 10 times in the last 10 years, that's concerning. So whenever you have a loss in profit, just forget everything. That's my rule. I follow that, and so far I have profit on my stock market. So that's good, you know, obviously I know something. So when you have loss, forget about the stock. Does the debt decrease? No, it doesn't. It actually increases, but I'm not sure if we mark this as a good thing or a bad thing. No, we marked it as a good thing, because even though it decreased, even though it increased, it was still decreasing through the years. So that's a good thing. Do they have money on the bank account? Yes, they do. They have, I think, $2 billion. Is the stock undervalued? No, it isn't. And is the Cleveland Cliffs price below 150? Yes, it is. So now, should you buy or sell? According to our valuation, you should buy, because we have 4 times buy and 2 times sell. But I told you, whenever we have a loss in profit, sell the company, forget about it. I'm sorry to say it, but this company is a bad investment, especially when you think about it, some mining company. Who do you know that works in a mine? Nobody, just like I do. Maybe my grandfather was working, but that's about it. That was like 60 years ago. Right now, not many people work in a mine, so that's why mining stock from the beginning is not that good investment as, for example, some financial or some computer stock. You know what I mean? Not only that, additionally, they had a loss in profit, as we said, so that's immediately a no-go. Immediately. And then if you are more interested in that, look, bro, here I will also show you my detailed evaluation. In retained earnings, they tell us how much money they reinvest back. And if they have minus, that means that they paid more money to someone rather than the money coming in. You know what I mean? They spent more money rather than earn the money. You know what I mean? So that's a bad thing. That's completely unsustainable. Only in the last few years they are reinvesting the money back, which is a good thing. But overall, no, bro. No, no, no. I personally wouldn't buy this stock. So yeah, if you want to know more about stock market investing, click the first link in the description. I will teach you everything about it. If you want to join me on this journey to become a millionaire, click subscribe, do the hard work, and see you on top of the world.